up next, we have a panel led by Jean-Luc on alternative opportunities in Asia, featuring Michael Wong from My Capital and Louis Slew from Mimesis Capital.
All right. Thank you very much, Tatiana. All right, so we have everybody here. Thank you guys. Thank you guys for joining. So we are going to spend the next 40 minutes on another very interesting topic, which is alternative opportunities in Asia, focusing on crypto. So that's really great, and I'm extremely happy that I have with me two of the most prominent players in this sphere, respectively in Hong Kong and in Taiwan. So that's really cool. That's really great. Two different countries, two different strategies, but we will be focusing mainly on what we have in common here, which is, what is the general investor appetite, the relationships with regulators now, and how we see that evolving, and how we see the market going in general. So just to introduce those two gentlemen briefly, and then I will let you guys explain who you are and what has been your journey so far, because I believe it's important for people to understand exactly where you come from. So we have Michael Wong from My Capital. So My Capital, correct me if I'm wrong, is a multi-strategy hedge fund management firm specializing in blockchain and cryptocurrency investments. You guys develop and deploy different strategies, quantitative trading and arbitration strategies. And Louis, Chief Investment Officer at Mimesis Capital. You are on a different side, I would say. You are more like a single family office that is a big believer in Bitcoin, especially. Maybe not only, but especially. And you are developing a strategy as a single family office to transform modern portfolio with niche wealth preservation strategy into Bitcoin equity and investment grade art. So basically Bitcoin, crypto, and art, everything that I love. So thank you again for being with us today. So as I was saying preliminarily, it would be good for the audience to know you a little bit better. So can you please, guys, introduce yourself in 1 or 2 minutes, respectively, who you are and what has been your journey to this wonderful world of crypto finance so far? Maybe we start with Michael.
Sure. Thank you. Thank you, Jean-Luc. You can hear me okay?
Yep, perfectly well.
All right. Hi, everyone. My name is Michael Wong. I'm from My Capital here in Hong Kong. I'm one of the co-founders of My Capital, and we started our journey back in 2018, and we saw this opportunity of this blockchain and cryptocurrency, the whole evolution and the growth of it, and we saw an opportunity that in the asset management space, at the time, there's really not a lot of offerings out there that comes with all the institutionalized bells and whistles that we would come to expect when we think about investing in funds or asset management, especially in this cryptocurrency space. So back in 2018, we went to the regulator here in Hong Kong, the SFC, and we applied for an asset management license to run some blockchain-based asset investment funds. And fast forwarding that, we got a license. We were one of the first here in Hong Kong to run two actually multi-strategy long short hedge funds in the blockchain and cryptocurrency space. And now we're running these two funds with over 2 years of track record. The market has been treating us very well so far, and our funds are doing gangbusters. We took a slightly different approach. There are different ways to invest into cryptocurrency and blockchain. We have a couple funds that have different types of strategies with different products, and we mainly look at kind of betting on the long-term growth of it, but at the same time adding a lot of the risk management practices and mechanisms so that we help to protect our investors' downside, both from a market risk perspective as well as counterparty risks and other risks that comes with investing into virtual assets or cryptocurrencies. So that's really what we do right now. We focus mainly on asset management. And again, we run off a license here in Hong Kong.
Thank you very much. Luis.
So I'm a founder and I would say CEO and CIO at Mimesis Capital, which is a single family office. We focus on wealth preservation, and we started as a single family office because we see Bitcoin as a wealth preservation asset, and we primarily invest in Bitcoin and Bitcoin only. We also invest in startups that focus on Bitcoin infrastructure. We invest in multi-sig technology. We invest in Bitcoin DCA strategy. We invest in renewable energy that could be plugged into Bitcoin. That's our strategy. I mean, we really just focus on Bitcoin and Bitcoin only, and we don't do blockchain, and we don't invest in other crypto. So my previous background is I work for a family office in New York, manage $1 billion fund. I also work as associate at Block Tower Capital, which is a very prestigious hedge fund, also based in New York. What I find out is, there's lack of understanding in this crypto space where Bitcoin dominate the asset class. And after I left Block Tower, I started this thesis where why not we just put our cash flow as a family office, and we own family business. Why not we just put that cash flow into Bitcoin on a balance sheet? And so far we did that in 2018, 2019, and 2020. And going forward, we continue to put in cash and our proceeds into Bitcoin. This is not a hedge fund strategy, but we call it a wealth preservation strategy. We wanted to preserve wealth across generation. That's the founding of Mimesis Capital and the belief that we have here. Yeah, I mean that pretty much.
How's that going so far?
What's up?
How is that going so far?
That's going tremendous and spectacular. I think Bitcoin, if you dominate any fins in Bitcoin, right? Tesla, Google, even the hot altcoins out there, if you denominate in Bitcoin, you see they are crashing against this strong asset or this hard money. And we believe that situation will continue going on. And we implement this very, very simple strategy, and we have very great return. And we don't have this kind of LP mandate that we will sell Bitcoin this year, next year. We probably never sell Bitcoin. And the way we're gonna develop this is, we just have a good relationship with bank. We have good relationship with US bank offering loans. I think GDA also offering this kind of products. We could just hold on this position forever and continue to buy up this scarce asset that's only 21 million hard cap. And that's our belief. And that's the strategy we implement at single family office. And we wish, other family to join other family office to implement the same strategy. We are really concentrate, but we also think other family office should move into this space. And I think, as I have talked to a lot of people, working family office space, that they are considering this strategy as the ultimate way. Why not directly own the asset and have the keys, right?
Yeah, I mean that's a very interesting point. I mean, and I like to mention research whenever we are having this kind of discussion, and you know, I would like to mention this Fidelity Investment Survey that you guys probably heard about it already, but basically that it reveals that 22%, I guess, that over 22% of over 400 institutional investors, including family offices and foundations, have explored investment products related to digital assets. It doesn't mean that they want to own Bitcoin itself, but they are considering this kind of alternative investment. Obviously, the reasons are usually quite financially motivated, obviously, portfolio diversification, limited correlation with traditional asset classes, etc., etc. But we definitely see this coming. My question to you guys would be, how do you see your respective ventures in the general objective to build a legitimate, proper, institutionalized setup from the very beginning, either from a single family office perspective or from an investment fund or hedge fund like My Capital, because institutionalization is basically, and institutional investors is basically what everybody is talking about and what everybody is after right now. Maybe Michael, you can say a few words about that.
Sure. Yeah, we spent actually a lot of time, especially in the early days, to design a whole operational flow of how do we manage the investments that we make into this space, but at the same time protecting all the various risks that are introduced because of this new asset class. Traditionally, if you invest into equities and those sorts, you basically just deal with your prime broker and they take care pretty much of everything in terms of storage, custodian, and the trading of it. And but in the crypto space, this is a very rapidly evolving ecosystem of players. And when we started more than 2 years ago, they weren't even, it was very difficult worldwide to find custodians that are up to par in terms of having insurance coverage and having proper licenses. And even to this day, there's really not a lot of prime brokerage options out there for crypto. And so how do we have an operation where we have investment managers that have exposure to sensitive information and even some access to the virtual assets, but at the same time protecting kind of from cybersecurity issues or other accidental or even theft related issues and risks. And so all these operations kind of need to be designed and customized depending heavily on the strategy as well, how you invest. And so we spent a lot of time kind of working this out and also
and
working
money,
with partners. Too. Yeah, exactly. And also working with partners, right? There are some partners that were also new to this space, and but they also come from a traditional finance with the same mindset, and they realize these are all the risks that needs to be put in place. So these are all the risks that needs to be managed. So so we work together to put in the right procedures in place, and I think that's where. And that's a big part of how we got our license as well, is the regulator needs to see that we have these systems in place to do that.
Yeah, of course. Luis, how is that different from a single family office perspective?
So we implement a very different custody solution. So our custody partner is called On-Chain Capital, where they provide this multi-sig solution where you can hold 2 keys out of 3. You hold the majority, and only you have the majority to access the Bitcoin you have, and they have another key for the backup in case you lose one of your keys. So that's the setup we have. It's not that complicated. It's a new way of custody that you could own your own keys. So what we have, the reason we choose this is because we wanted to own the private key, right? But also in case of the minimize the risk of holding the keys, we want to spread it across different geographic location, also people who maintained it. So we spread that across into different location and geographic. If we want to open up the vaults where we store the Bitcoin, we need that majority of the key to open that. So I think this is one of the most secure option that we have for a single family office like us who holds a lot of Bitcoin. And there's another solution that we also recommend is to find partners like Fidelity Digital Asset or Anchorage, those very prestigious traditional finance custodian coming to this digital asset space that you can just give them all the ownership you have, and but that you need to go give up your keys, right? I think that's the true ultimate solution out there that you can pick from. One is to just give up your key to the institution, and another just multi-sig solution is a better way to own your own keys. So that's the two things that we have thought of, and we choose multi-sig because we want to have this power to move funds and access to the Bitcoin that we have. Okay.
All right. Brilliant. Brilliant. Is that something that your partners require from you in Taiwan? Because I mean, people usually tend to see Taiwan as a very special market. Like it's not like Singapore, it's not like Hong Kong. Everything is different in Taiwan. Is that something that is important for you too? Not just from a security perspective, but also because of your relationship with other partners, international partners, and your regulator?
For sure. I mean, if you spread your keys across different geographic locations, you basically minimize the jurisdiction risk that you might involve into. Like say, if Taiwan one day ban Bitcoin, ban the storage of Bitcoin, and if your keys are located in Taiwan, you pretty much get regulated, right? But if you spread your key set across different geographic and different jurisdiction, you kind of minimize that risk. So that's also a benefit to use multi-sig. So we have keys in US, and we also have keys in Taiwan, and we also have keys within the custodian. So that way we spread across different location in jurisdiction and geographic.
Okay. All right. Let's think about the business a little bit. Michael, in terms of your approach of the market from Hong Kong, globally, obviously China, but not only, because I know for having discussed this a lot with you guys that you have obviously a broader ambition. What do you think is the general investors' appetite right now for crypto as an alternative investment in Asia, family offices and investors in general? The reason why I'm asking this is because people usually say that family offices are by definition, by essence, conservative. Usually we tend to establish the two spectrum. I would say the first end of the spectrum is preservation. The other end of the spectrum is expansion. and family offices are usually seen as being more on the preservation side. What would you say? Would you say that is still true, especially now in a post-COVID world? Or would you say things are dramatically changing?
I would say most are still, especially here in Hong Kong, I think they're more in the capital preservation type mindset. I think what's different is that crypto was never they never equate crypto or anything related to crypto as capital preservation. They always see those two very distinctively different, separate. But because of recent events over the past year, what's happening worldwide, they see kind of these trends of blockchain coming back, crypto coming back, and they understand kind of the new reasoning and rationale behind all the surge in investment into Bitcoin and related. Now they're seeing that, hey, maybe this actually has a play even in a capital preservation strategy. I think this was mentioned earlier. Louis mentioned this as well in his strategy, that they see Bitcoin as a way to preserve capital in the long term, from a very long time frame perspective. This was never in their mindset a year ago when we had a fund and we were selling to all sorts of investors. And it was very difficult for us to convince a lot of these family offices, where their mindset was, okay, if I want to preserve capital, then I put it into gold, or I put it into say real estate. But then with COVID and all these things happening in the world now, Bitcoin actually is becoming an alternative to gold in this strategy, and so they are exactly, and they're buying, they're now finally buying into this concept, and also at the same time they see bricks and mortars and real estate also has been suffering all over the world, and is this the most the only way for capital preservation? Are there other ways to do it? So I think definitely, I think the mindset is opening up. Still, it's still very conservative, but they're including this blockchain asset class as now an asset class that they would consider under this preservation mindset.
What would you say would be the general allocation percentage of their AUM that they would put into something like Bitcoin?
I think it's still low. I would say 5% or less. I think it's more around that.
That's not too bad. That's not too bad. I mean, usually what I read online is usually it's more. It's like 1-2%. So that's 5%. It's already a lot. And if you consider that 10,000 family offices in the world, I know it's not necessarily very meaningful, but if 10,000 family offices in the world put 5% of their total assets into Bitcoin, this thing is going to go to the roof.
That's right.
That's right.
And the weird thing is, the higher the price goes up, the more people are interested in it, which is kind of backwards if you think of it from an investment perspective.
Yeah, absolutely. Luis, I spent quite a lot of time on the great research that you guys publish on your website. I have found a few things that are very interesting. I would even say a little bit shocking in terms of your theory, how aggressive that is. Let me give you an example. You guys believe that Bitcoin sellers may evaporate in 2021. So basically, that would mean that potentially we could end up in a situation where there is simply no more Bitcoin left to buy. And miners would not even need to sell Bitcoin anymore. So the scarcity model Bitcoin is supposed to be based on would be achieved at a level that we would not even have anticipated a few years ago. Can you tell us a little bit more about that? I found that
Sure.
very interesting.
So first of all, we believe Bitcoin is the best asset right now you could own, and it's the scarcest hard asset that humanity have ever created, right? What is going to happen right now post-COVID is we have this expansion of monetary supply, and it's expanding at a 50% to 20% rate. And what that leads to is this appreciation in the asset class. And what that occurred to Bitcoin is the scarcest asset will be owned, not for sale. So the miner, institution, fund, family office, they could just bought a lot of Bitcoin and sit it right there and use, other financial tool like lending, borrowing.
Use that as a collateral.
Exactly. And Bitcoin is becoming a pristine collateral asset that a lot of banks, even big banks, are eyeing into this because they wanted to have yield to collateralize against Bitcoin. And also miner, they could refinance if they are public market, if they are public companies, right? They could just sell equity to buy more Bitcoin. They could just issue convertible notes at very low interest rate to buy more Bitcoin. So if Bitcoin is appreciating at 20% annualized return, and that leads to is why would you want to sell the best performing asset in the world, and that's limited to 21 million, right? What I'm saying is not related to anything to blockchain and crypto, is only to Bitcoin. It's because this is Bitcoin's unique property. And family office like us, we want to own property forever, right? So our time horizon has stretched from maybe this to 1 year to 10 years. And a lot of, wealthy family in the world, they own a lot of assets that they are not going to sell. Maybe, for 20 years, 30 years, they're going to leave that to the next generation. So this situation is happening. Like if there's limited amount of supply and the supply is happening, and you cannot produce more as a price increase because there's difficulty adjustment and there's a limited amount of Bitcoin produced per block, then you have the most scarce asset in the world. So the rational conclusion is nobody is going to sell this. So if maybe trader want to sell this for volatility, right? For trade off the volatility. But the reality is this asset has appreciated 20% per year. And post-COVID, it had appreciating 500%, right? This is the best performing asset and the world's scarcest asset ever created. That's the rationale behind that research. We just want to keep it real.
And to be clear, your rationale is clearly on Bitcoin only, not on any other coin, just on Bitcoin, correct?
Exactly. That because that property, Bitcoin has that property, not other asset have. If you compare to real estate, gold, stocks, they don't have the same property as Bitcoin, and crypto as well. They don't have the same property and characteristic and same technological advancement. So Bitcoin pretty much differentiate across all asset, right? Even to its closest kind. And we believe the scarcity will drive up the price, and we believe nobody is going to sell when the interest rate is so low. They can easily refinance it, and that leads to this kind of like hyper growth in the price, and there will be no seller in 2021 and beyond. And I think people will just grab this as, with all the cash they have to try to, move into the safety net.
That's amazing. Absolutely amazing. Regulation, relationship with with regulators and their perspective about that. Michael, how has been your relationship with SFC so far? From the time you got the license and being based in Hong Kong, we all know how difficult that is. That's already a performance. But since then, how do you maintain your relationship with Hong Kong SFC? How has been this dialogue, this discussion going on with them? Do they understand what you guys are doing? And do they ask you questions about that?
Yeah. We have regular exchanges with them, and they will ask us stuff, and obviously we have to answer. But I think it's a constructive communication with them. I think from our end, I think the interest is to continue to support the regulation to progress in this and for this ecosystem. I think in Hong Kong, it has become a financial center not because there are one or two players. They're very good, right? It has become a financial center because there are thousands, literally, of financial institutions that are operating from all aspects of the ecosystem. Some are asset managers, some are brokers, some are traders. You need to have kind of a vibrant community of players and legitimate players in order for this ecosystem to thrive. And we're hoping to see the same thing here in Hong Kong. Recently, SFC has given the green light to the first exchange here in Hong Kong to be licensed and operating under a license, which is great. And it's very exciting news. And we hope that kind of kickstarts a wave of momentum where there will be more financial institutions, asset managers like us, broker dealers, and even other exchanges that they would approve and can operate here in Hong Kong. And I think it's really, that's when we get really excited, because then there's really a lot of innovation and activities are then really happening here, and all operating within a regulated kind of institutionalized kind of environment, which is really our goal. Because there's, yes, the crypto world, the crypto economy is growing, but there's still a much larger economy in the traditional world that we're hoping to bridge into this new economy, and the regulator will definitely continue to play a big part there.
Yeah. In Taiwan, Luis, I was telling you about this story the other day when we were speaking on the phone. Last time I went to Taiwan, I met with this gentleman called Jason Su. People call him crypto congressman. Would you say that having someone at the legislative level that is calling himself crypto congressman? Actually, I think it's Vitalik Buterin who gave him this name, crypto congressman, which is quite cool, actually. Would you say that says something about Taiwan being, indicating Taiwan desire to be a hub for crypto-related activities?
To answer that question, I think we need to look at the history of how Taiwan adopt new financial technology. So I see Bitcoin as a new kind of financial technology. And, you know, the past history of Taiwan adopting new financial technology is quite embarrassing compared to Hong Kong, compared to Singapore.
Well, tell us more about that, please.
Yeah. So my thinking is you don't want to wait for them to act. You know, you wanted to front run those regulators. So yeah, you know, Jason have been pushing this narrative for a while, but haven't been really successful. Is because you know, just take a step back and think about you know, third party payment, right? Like Alipay, like PayPal. It took Taiwan maybe 20 years to adopt this new financial technology, to have this legislation that is regulated for those business. So it took a while. It took a long time. And I think Bitcoin and Taiwan to adopt it as a new financial technology, you know, we're still seeing unlikely happen this year or next. Maybe something will change, but the reality is we adopt new technology, especially related to money, finance. We adopt it quite slow. So what we try to do is we don't want to wait for them. We wanted to move across different jurisdiction, and that's the beauty of Bitcoin, because you can move around quite fast. So yeah, that's my comment on the Taiwan regulation side. I'm not too optimistic, but I'm looking for them to have something, you know, to prove themselves as a crypto hub. But right now, it's not really a crypto hub.
All right. Okay. What are your respective strategies, guys, to grow in the region, and what do you think is missing? Because obviously we know the crypto industry in general, the crypto ecosystem is still very nascent, even if it's already a $1 trillion industry. But still, what do you think would be give me the one or two key points that you think would make the entire difference, and that would propel Bitcoin and crypto in general, you know, to being a mainstream asset that is broadly accepted and considered by all investors and all family offices, especially now where again in this COVID-related moment in the world, we see there is an ever diminishing list of diversifying and correlated assets. So Bitcoin being one of them, or is supposed to be one of them. What is missing? And do you see that happening this year, 2021? Maybe Michael?
I think in the near term, our plan is to continue to educate. I think the you know, investors or the financial institutions relating to this asset, not just Bitcoin, but even, you know, across other blockchain assets and crypto, etc. I think each have their own reason and investment thesis behind it, which you know, varies and also quite different from other traditional assets that you know, that offers. And by, you know, because we are regulated, we are licensed, other traditional licensed financial institutions are also more keen to work with us. They're more open to work with us. And so we are working very actively to partner with other traditional institutions which may want to come into this space or tap into this space. And so we're partnering with them either through distribution or some sort of partnerships and at the same time, basically educating them on understanding this asset class, because ultimately, we need kind of this education to not just come from us, but really to have a network effect to really broadcast kind of this new asset class to more and more investors, to our investors, and also to their investors. And so we're spending a lot of time and effort this year to grow that network of partners for us, and we're targeting a lot of these traditional institutions to help us. To just to let people know that there are different ways to invest into the space. Obviously we have a couple of products that's been doing very well. But what are the rationale behind it? What are the risks that people need to understand? So I think that's kind of our near-term thing. I think longer term, as I was saying, we're still a big believer in doing things the right way, and we think asset management is one aspect of it, but there may be other interesting aspects related to financial dealings on this asset class that we might be interested in. So we might pursue kind of other licenses as well along the way. So that's kind of what we're planning to do, since you asked about, kind of strategically where we're heading.
Yeah, and obviously, there's one point that we haven't touched during this entire discussion, but it's a broad subject, but I have to ask you, Michael, ETF.
Yeah.
Would you what kind of impact would you say having an ETF approved would have on the market? And is that something that you guys have in your pipeline?
Yeah, I think there's now a very high expectation that sometime this year in US there will be SEC may approve an ETF. Recently, I think over the past 3 months, there has been a few ETFs that were approved. I think in Canada, mostly in Canada, and so I think the regulators in the Western world are coming around to it, which I think it's great. And frankly, I think the regulators here in Hong Kong or even Singapore and Taiwan, I think it's more waiting in the sideline for someone like the US to at least give the green light before our regulators will start acting upon it. So I think seeing a crypto-based or Bitcoin-based ETF in the near term here in Asia will be unlikely. But I think in the midterm, 2 to a few years time frame, I think that's very possible. And Hong Kong actually has been quite advanced in terms of pushing ETFs and also just in general, and now enabling more asset managers to deal with crypto. So I think we think Hong Kong could be a great place to do that. We're exploring in this area. It's going to be a long-term project for us, and we're definitely talking to partners to see how to capture any opportunity from this side.
That's extremely exciting. Thank you. Mimesis Capital, I have a question for you, Luis, from the audience actually. What are your thoughts on investing into early stage mining projects right now? And another one that seems to be the complement of the previous question. Do you think the hash rate is too centralized for new entrants, to gain market share? What do you think?
I don't think it's too centralized. So first of all, I know miners in China, I know miners in the US. And what's happening in the last couple of years is that US is catching up with Texas as a hub, right? Texas right now have multiple mining facility built up. Also, in Canada, where you can find this cheap renewable energy that you can mine Bitcoin at a large scale. So I think it's become very competitive, but it's not like doable to steal away a little bit of percentage in terms of hash rate. So I knew a miner in Texas. They grew from 0% to right now 2% to 3% of the global hash rate, right? So it's doable. It's doable within 2 to 3 years, but the timing has to be right. So they did it during the bear market. So right now, I think mining have been very competitive space because right now the price is rising. Everyone try to mine Bitcoin. And that leads to a lot of competition, and we also have this kind of shortage in the mining machine, ASIC mining machine. We also have that kind of shortage right now. So go back to that question. Yeah, I think it's doable. I think the mining industry have been changing a lot in this history of Bitcoin. You first mine with CPU and then GPU and then ASIC. And the player has been changing as well. And in the next phase, all this mining facility or miner have to, search for cheap, renewable, low cost energy. And then that could be the global race, toward this kind of green renewable energy. And that can give it significant advantage in terms of lower down the electricity cost. And also provide this kind of sustainable electricity to the mine. So I think we are moving to that direction. I think we are moving into more renewable electricity. I think you will have specialists to monitor the electricity change. You will have more specific, more data-driven model that help miner to mine efficiently. Machine is one key. Another key is this data generate. How you're going to generate enough data to try to mine efficiently. So I invested in a company called Satoshi Energy, especially in doing that, helping renewable energy provider and miner to search for this kind of sustainable, cheap cost renewable energy. I think it's becoming very clear that Bitcoin mining is not wasting a lot of energy. Is actually helping those energy provider to have sustainable revenue, also helping miner to go into that cheap electricity cost. I think it's a win-win for both party, and I think it's a win for the global as we're talking about this global warming stuff. I think Bitcoin is good for that. It's good for green energy. So I think mining is going to change a lot in the next halving. People, is going to become more competitive. It's going to be more data driven, and it's going to require better machine. Yeah, I mean, people will come into that with the advantage, right? It just this is a capitalism, and this is kind of like global race toward cheaper energy. I think yeah, that's my answer.
Great, thank you very much. Last question, 1 minute please, each, on secondary and tertiary opportunities like DeFi, liquidity mining, and staking. Yes or no? Do you guys believe in it? Do you guys would consider this as a potential investment asset class for you, Luis, or for Michael, as a potential component of a new synthetic product, maybe for your client, or would you say you don't believe in it? Maybe Michael. 1 minute.
Yeah, we're super excited. We're super excited with DeFi, decentralized finance, and the applications and what it promises. I think we have some investments in this via our fund, but not to the fullest extent in the sense of liquidity mining, etc. This comes with a lot of additional operational risk, and that's so we're working out to the kinks to figure out how to do it. But I think there's a lot of potential in it. It does help the whole crypto ecosystem to grow, because it kind of addresses a big gap that this market didn't have a year ago. So yeah, we're super excited on that, and it's still quite early. As I mentioned very earlier, I think a lot of the ecosystem players that providing services in and around it are still just coming around to it. So it's still quite new, but I think the long-term potential is definitely there.
Okay, all right, Luis.
So this is a very interesting question. DeFi.
I knew you would love it.
I don't want to really comment on this because I think DeFi in general is a good concept. It's an interesting technology that's happening on beside Bitcoin. But what I see this is DeFi has to be built on solid infrastructure that it already have economy scale. Right now, a lot of DeFi projects build on something that's haven't reached this kind of economy scale or robust historical record that has been proven stable. So I think in the coming years, you will have projects focusing on, Ethereum DeFi or other altcoin platform DeFi, try to, raise capital. And you're going to see some project raising a lot of money, but end up not fulfilling what they promise. Just like what we see during the 2017 ICO bubble, a lot of projects fail. So I think most DeFi projects right now are lacking this understanding that they are too rush to try to give you this application that you can use. But the whole infrastructure for DeFi is not robust. So I love to take step back and be like observer of this space growing, and I'm more I'm more inclined to see more project built on Bitcoin, right? Using Bitcoin infrastructure in this economies of scale to build this DeFi ecosystem, and I think it's happening. And
absolutely.
Yeah, and Bitcoin is the first network that achieved decentralization, right? You don't have a counterparty risk you'll be using Bitcoin, and this is going to shock a lot of so-called DeFi project that is built on other beyond outside of Bitcoin ecosystem. And the reality is, I as an investor, what I want is a robust, solid, track record, proven, stable network to help me earn more Bitcoin. That's my incentive, and that's why I want to put my capital to work. I don't want to put my capital onto some $1 billion, only $1 billion worth of economy, like say Ethereum. I mean, they have 100 billion something, right? Market cap. I don't want to risk my capital on it just to play around those DeFi project. I want to do, really solid platform to help me to make more returns. That is, that has involved no technical risk, involved no counterparty risk, and that's, I think, the future of the DeFi. And I want to be closer look at it. I think it's going to be exciting stuff.
Fantastic. All right, thank you very much, guys. Oh, one last question. I just want one number. Take a bet. Bitcoin price December 31st this year. Luis, please.
I think we are in this, institutional adoption phase. I think we are going to 100K. 100K. I think 100K is very conservative. Maybe 200K. But I don't predict price. But the things I think 100K is pretty much very, very promising.
Okay. All right. Cool. Michael?
Yeah, I think nearing the 100K, but I think that's, for us, we're long short, so we're trying to make money even if it goes down a bit. So, so I think we're okay.
I love your question. Fantastic. Thank you very much, guys. That was extremely enjoyable, very entertaining, and also very educational and informative, just what we were expecting it to be. I'm sure we will have a lot of questions from the audience. Again, it's just the beginning of the conversation, but this one was extremely interesting. Thank you very much for your time. And I will now pass the mic back to Tatiana.
Thanks so much.
Thank you.
Thank you for this wonderful panel. I'm getting ready to go buy more Bitcoin, and you guys got me all hyped up.